I always can tell when my message angers people or annoys them because the questions they ask come zinging at me with spears and pointed edges. And so I was doing a talk last week to a group, and the questions started coming. And the first question that I got from this guy, he said, "Well, you're a timer. Well, this is just a timing thing." And he said it with, he was doing his best to manage his anger, but he said it with anger. And I was like, oh, well, actually, everybody in the stock market is a timer. There's two types of timers. There's the ones who are like, my knee hurts this morning, I'm getting out, or I don't like what I listened to on the news, I'm getting out or getting in, or I just saw Jim Cramer do something, I'm getting out or getting in, right? So there's the timers that go with like their gut feel and there's no structure, and it's literally all their limbic system, their amygdala making the decisions. And then there's the other timers, and this is everyone else. This is the, big box buy and hold, just put your money in and have it in for the rest of your life until you need it, right? That's a timing mechanism. Now, they have structure behind that. They say, this is actually what we think is best to do this. So, they've done their due diligence and they say, this is the best time to have it in, which is forever until you need it. And so the second type of timer, and I was saying this to the guy, I said, well, the second type of timer is someone who has, structure to when they get in and when they get out. And I said, all things being equal, it's the ones that have a structured, disciplined approach, with a checklist that is clearly telling them with signals that have been, tested, they're also timing. So look, everybody's a timer. Now, of course, he did not like my answer, and he wasn't even asking the question to ask the question. He was just asking it to pick a fight. But what I often find is that this idea that there is a straightforward way, that there is a practical way, that there are cycles within the market. There are times where you do not want to be exposed to the international market that last 5, 6, 7 years. It makes people crazy. And that was an example of it. Now, what's funny is I didn't know until after the talk. I was talking to one guy there. And I said, wow, like, what's up with this room? He's like, oh, half the people in this room are ex-financial advisors. I was like, oh, which I did not know. But that made sense why he was not the only angry question that got thrown at me. So anyway, I wanted to share that with you, how this is not a normal thing, or this approach is not a way that most people would accept, because it really challenges their identity and their belief system. Hey everybody, this is RC Peck, and it is November 5th. This is my weekend podcast, and it is so good to have you here. The theme for this weekend, let's call it perspective. And it's hard to get perspective when you're in the traffic, right? When you have a bus in front of you spewing out some sort of toxin that you do not want in your car, that you are late for the ballet show, or for even worse, for your kids' play, or to pick up your kids, and you are stuck in traffic. And it's hard to get perspective when you're in it. And I often find people who look at too much detail and get caught up in the noise are just like people in traffic. And my suggestion is, if you can somehow put yourself up in that helicopter above the traffic, 1,000 feet, 2,000 feet above the traffic, and see like, okay, look, it is slowly moving. It is going in the direction you want to go. It is just moving slowly. It helps that person in the car go, okay, freaking out is not going to help. Now, just so you know, I'm human. I freak out, of course. But I do practice these techniques when I am in traffic, and I rarely am because I don't commute, that I say, look, will I be there on time? And I am one of those people who believes that on time is 15 minutes early. And so it helps me. And yes, I get it, not always that I'm going to be on time, but I can't move the traffic anymore. So I want to talk about one asset that's been having more attention put on it than I think rightly should, and it's the US dollar. So if you look at the screen here, this is a price chart of the US dollar, and each vertical line represents the beginning of a new month. So this one right here is the beginning of November. You have October, September, August, July, June, and May, right? So we're looking at about 6 months of data. And there's been a lot of noise and talk about how the US dollar has exploded higher. I mean, look at that explosion. And just so you know, this price chart, every little wiggle is a 2-hour wiggle. So there's 4 of those wiggles in a day. And look, I get it if I was a day trader and day trading the US dollar against, the basket of stocks that it is compared against. I could see how it is tightening here. I could see how it got very tight in here. I could see how that 72-hour period, because each little swiggle is 2 hours of the stock market. So the blue line is a 70 period, and in this case, the period is 2 hours. So it's a 72-hour period. That's 70 space, 2 hours. And I can see here how it got completely flat, and it was going to do something. And then from this time scale, you're right, it does explode higher and then fall back about half the way. Absolutely. And if you're a day trader and if you're profitable at being a day trader, you could trade this. First of all, the problem is literally 99.9% of people are very bad at day trading because most of the time they're spent in their amygdala and their limbic system and not in their prefrontal lobes because they don't have a checklist. But I get it that if you're looking at this time frame, this is like the car in traffic with a bus in front of it that can't see the big picture. When you step back, and this is an example of stepping back, is looking at the dollar from this perspective. Now, I still have the two converging blue lines right there, and you can see how it was converging for that, call it 3 months. If you want to start back here, you can say for 6 months, and then it converged here, and then it exploded higher. But when you step back and say, okay, look, the dollar started in this channel in January of last year. We're almost to January of 2017. So we've been in this, the US dollar has been in this for 22 months. Now on this scale, because this is a daily scale, this blue line represents 70 days. It's a 70-day moving average. So it's taking the average of 70 days. And so you can see how it kind of meanders up and meanders down and meanders up and meanders sideways and then explodes higher. But when you step back, you say, look, do we really need to worry about the US dollar if it's in this 22-month channel? I mean, forget what the news is and Trump and Clinton and Mario Draghi and China and money printing, and the federal funds rate not getting raised, which it should have, right? I get all that. But the US dollar, which is one of the most traded and possibly the most liquid asset on the planet, in fact, it is the most liquid asset on the planet. And if not the most traded asset, certainly in the top 3. There are tens of trillions of dollars represented on this price chart. Guys, if we know about Mario Draghi and Clinton and Trump and the federal funds rate and Janet Yellen, then this price chart does, which represents trillions and tens of trillions of dollars traded, knows about it too. And what's been going on is just like a sideways, kind of going between 93 and 100, meaning not 93 miles an hour, but 93 here, up to 100 is kind of bouncing between the two. And until it makes a move out of this channel and stays out of it, the moves within it don't matter. They do not matter. And so this is perspective, because all too often, and look, I have a human brain, I get it. All too often, we're brought back into the chatter of it and the noise of it. And I have no problem if you're a day trader or you do options or option spreads and this is your thing and you're looking for tightly constrained markets. I get it. But most of us don't need that and don't want that. It's about stepping back and getting that picture, and that's what's most important. So what is the takeaway? Perspective matters. Perspective matters. If you're in the traffic, if you're in the noise, it's going to greatly affect your mood, right? Bigger is almost better. And what I mean by bigger is getting the bigger perspective, stepping back, getting that 22-month perspective over the 6-month perspective really shows you, wow, okay, nothing much going on here. Also, too, guys, more detail isn't better. More information isn't better. And if you can eliminate the noise, and you've heard me say this many times in the kind of the takeaway section, if you can eliminate the noise, which of course you can, it's whether you want to or not. When you eliminate the noise, then you start to see the real pattern. You start to see the real direction. You start to see the path of least resistance. And right now for the US dollar over the last 22 months, the path of least resistance is unclear. There is not a path of least resistance right now for it. And when there is a question mark, what's best to do is nothing. And sometimes doing nothing is what's best for your money. Oftentimes doing nothing is what's best for your money. So thanks for being here, guys. Look, this is just another step in helping you protect your portfolio and protect your future. Until next time, this is RC Peck. Hey guys, you've heard it from me, and it goes to, I got to tell you something that happened to me yesterday. It's so important. So you've heard me show this before, and I show an image of a very infamous ship liner. And I talk about how, look, whether you're in large cap or international or values over here, small cap, mid cap, REITs, right, munis, right, growth, if it's all in the same container, if it's all in the same conventional idea, it doesn't matter. Heck, you can even shuffle the deck chairs and it won't matter, right? I could say this differently. Whether you're in steerage, you have a presidential suite, you have a balcony, you're just in a standard room. If the boat you're on hits something and sinks, it don't matter where you are. It also doesn't matter if you shuffle around the deck chairs. This is the conventional idea of investing. And I was reminded how just strong this idea is by two conversations I just had. One, talking with someone, he's like, look, the market's super efficient. Efficient market theory clearly says you can't tell which is high value, which is low value, so you just buy the market. I'm like, well, no, that's actually not true. And then I audited someone's portfolio yesterday. Their statement, they sent me a statement. You've heard me talk about this, that, hey, send me your statement, fill out a dashboard, get on my schedule, and let's talk. Let's look at your statement. Let's look at your boat. Let's find out where all the holes are, all the leaks are in your hull. And we looked at it. She had about $400,000. She was at Fidelity. She had 18 mutual funds, 18. 5 of them were funds of funds. This is where you buy a mutual fund, and that mutual fund buys another dozen mutual funds. And I pointed out to her that that fund that held the other funds, that alone had a expense ratio of 90 basis points, almost 1%. 1% has 100 basis points. And then the funds that were owned in that were also expensive, ranging between 60 and 90 additional basis points. And then on top of that, she was paying 90 basis points in money management. So literally with these 5 fund of funds, she was paying almost 3% in money management fees to do what the market does, minus fees, commissions, and expenses. But it wasn't just the funds of funds. Then she had all these international funds. And I showed her the price chart that you've seen before that shows that you do not want to be exposed internationally and should not have been the last 7 years. I said that was an expense. That was a drag on your life. And then I also showed her how even being in large cap has hurt. And then I even showed her how even just being in all these mutual funds that carry a expense ratio of 80, 90 basis points is hurting her life. The point is what she said to me. That's the point, what she said to me, because RC, I've been listening to you for years. I've heard you say, get an audit, get a second opinion, get a strategy session. I've heard you. And each time you said that, I'm like, yeah, I'm good. I'm good. And what she said to me really struck me. She goes, you know what I really realized? I knew I never was good, but I was scared. I was scared to call Patty or email Patty. I was just scared. I was scared to have the conversation with you. I was scared to schedule it. She goes, I wasn't busy. I get busy is just a way of hiding scared. And it was just amazing that she said that, because most people won't say that out loud. They won't think that, they don't even know that consciously. But she said, I was scared. And finally, when I realized I was scared, I realized I needed to get a strategy session with you. So guys, get a strategy session. It may just change your life. Thanks for being in my world. I appreciate you. You guys take care.